Impact Report, anticipated 50% adoption increase in e-commerce gaming and remittances by Q4 2025. Date, February 4, 2025. Theme, Impact anticipated 50% adoption increase in e-commerce gaming and remittances by Q4 2025, insights from industry experts. Executive Summary. As we approach the fourth quarter of 2025, industry experts project a dramatic 50% increase in the adoption of e-commerce gaming and remittances. This surge is indicative of a broader transformation within the financial services landscape, primarily driven by technological advancements, evolving consumer behaviors, and significant regulatory shifts. The projected growth reflects a combination of factors, including enhanced internet connectivity, the proliferation of digital wallets, and the increasing acceptance of alternative payment systems. The integration of artificial intelligence (AI) technologies is expected to further enhance user experiences, operational efficiencies, and security protocols across these sectors. Key insights. 1. E-commerce growth. The global e-commerce market is forecasted to grow to approximately $7.5 trillion by 2025. This growth is largely attributed to improved internet infrastructure, particularly in developing regions, and the rising trend of digital payment systems. Digital wallets are anticipated to account for a substantial share of e-commerce transactions, enhancing consumer convenience and accessibility. 2. Gaming sector expansion. The gaming industry is experiencing unprecedented growth, fueled by advancements in technology and a surge in consumer engagement. Experts believe that the integration of AI will significantly enhance player experiences and operational efficiencies within gaming platforms. Trends such as cloud gaming and the rise of eSports are expected to drive further adoption, especially among younger demographics. 3. Remittance services. The remittance sector is projected to grow significantly, driven by the increasing utilization of digital currencies and blockchain technology. Innovations in this space are expected to reduce transaction costs and enhance the speed and transparency of cross-border transactions. As traditional banking systems face challenges, remittance services leveraging cryptocurrencies are becoming increasingly appealing to consumers looking for cost-effective solutions. Sector analysis. E-commerce. The e-commerce sector is on track to reach $7.5 trillion by 2025, representing a 50% increase from previous years. The growth is supported by technological advancements, enhanced logistics, mobile commerce, and the integration of AI for personalized shopping experiences are key drivers. Increased internet penetration, particularly in Asia-Pacific regions where a burgeoning middle class is rapidly adopting online shopping. Consumer behavior shift. The COVID-19 pandemic accelerated the adoption of online shopping, with many consumers opting for the convenience of digital transactions. Gaming. The gaming industry is poised for a 50% increase in engagement and revenue by 2025. Factors contributing to this growth include AI integration. AI technologies are improving game design, player behavior analysis, and fraud detection, resulting in enhanced user engagement. Diverse gaming platforms. With the rise of mobile and cloud gaming, access to gaming has never been easier, contributing to a more extensive user base. eSports growth. The competitive gaming market is expanding rapidly, attracting significant investments and sponsorships. Remittances. The remittance sector is expected to expand substantially, driven by blockchain and digital currency adoption. These technologies are facilitating faster, cheaper remittance solutions, appealing to an increasingly mobile global workforce. Regulatory changes. Governments are beginning to embrace digital currencies, which is anticipated to streamline remittance processes and reduce reliance on traditional banking systems. Technological integration. 1. Artificial intelligence. AI will play a crucial role across all three sectors by enhancing security protocols, improving consumer interactions, and streamlining operational efficiencies. Companies are expected to adopt AI-driven tools for fraud detection, customer service enhancement, and personalized marketing strategies. 2. Payment innovations. The rise of digital wallets and alternative payment methods such as Pay by Bank and BNPL Buy Now Pay Later is reshaping how consumers interact with e-commerce and gaming platforms. Instant payment systems are becoming mainstream, with experts predicting that real-time transactions will account for a significant portion of all electronic payments by 2025. 3. Regulatory landscape. The regulatory environment is evolving, with new frameworks being introduced to manage the complexities of digital payments and cryptocurrencies. Compliance with regulations such as the Digital Operational Resilience Act (DORA) is critical for financial institutions to ensure resilience against emerging cyber threats. Conclusion. The anticipated 50% increase in adoption across e-commerce gaming and remittances by Q4 2025 underscores a transformative period in the financial services sector. Companies looking to thrive in this environment must prioritize technological innovation, consumer trust, and regulatory compliance. The interplay of AI advancements, evolving payment infrastructures, and the ongoing regulatory evolution will shape the future landscape of financial services, compelling institutions to adapt rapidly to remain competitive. Recommendations. Invest in technology. Financial institutions should invest in AI and machine learning technologies to enhance operational efficiencies and customer experiences. Focus on regulatory compliance. Staying ahead of regulatory changes is crucial for maintaining consumer trust and avoiding penalties. Enhance customer engagement. Leveraging data analytics to personalize customer experiences will be essential in retaining and attracting users in a competitive market. By embracing these trends and focusing on innovation, companies can position themselves for success in the evolving financial landscape of 2025 and beyond. The anticipated 50% increase in adoption rates for e-commerce gaming and remittances by Q4 2025 is underpinned by various counterintuitive insights. Here are some of the notable points. 1. AI backlash versus adoption. While AI is heralded as a transformative force expected to boost operational efficiency and customer experience, there is also a significant counter-narrative concerning the potential backlash against AI due to privacy concerns. This skepticism could slow down its integration into financial services, contrasting the widespread expectation of seamless AI adoption. 2. Regulatory divergence. The anticipated regulatory landscape highlights a split, with the EU moving towards stricter regulations on AI while the US under Trump's administration may pursue deregulation. This contrast could foster innovation in the US but might simultaneously increase risks, potentially leading to a chaotic environment for businesses trying to navigate fluctuating compliance requirements. 3. Consumer behavior shifts. The COVID-19 pandemic accelerated the shift towards digital platforms and e-commerce, transforming many first-time online shoppers into loyal customers. However, this conversion is not uniform across demographics. Older consumers may be slower to adopt digital solutions, suggesting that the anticipated growth may not be as widespread as believed. For real-time payment systems, expectations surrounding the mainstream adoption of real-time payment systems assume that consumers will embrace this technology universally. However, the reality might be more nuanced, as businesses may struggle to keep pace with consumer demands for instant transactions while managing the inherent risks associated with faster payment processing. 5. Sustainability as a driver. The growing consumer demand for sustainability is driving businesses to adopt greener practices. However, some firms may view these shifts as burdensome, potentially leading to a reluctance to invest in sustainable practices that could paradoxically enhance their market competitiveness. 6. Embedded finance. The expectation that embedded finance will reshape the financial landscape suggests a seamless integration of financial services into everyday platforms. Yet this might lead to complications regarding compliance and security, as businesses must ensure they uphold stringent regulations while innovating. 7. Digital wallets and super apps. as digital wallets and super apps are set to dominate the payments landscape, a counterintuitive challenge lies in consumer trust. While convenience is paramount, many consumers remain hesitant to fully adopt these technologies due to security concerns, showing that ease of use does not automatically equate to widespread acceptance. 8. Rising fraud concerns. The expectation that technology will mitigate fraud is countered by the reality that as digital payments grow, so too do the methods employed by fraudsters. Increased reliance on AI for fraud detection could lead to a false sense of security, potentially leaving gaps that criminals exploit. 9. Cautious investment in financial services. Despite the anticipated surge in adoption and the introduction of innovative technologies, there is a growing sentiment of caution among investors regarding the financial services sector. Many are wary of high valuations and the potential for market volatility, which could hinder the expected growth trajectory. 10. Generational divide in banking. The rise of Gen Z in the financial landscape has led to predictions of a shift towards more user-friendly and technologically advanced banking systems. However, there is an underlying assumption that this demographic will uniformly adopt these solutions, which may not hold true across all individuals or regions. In summary, the anticipated growth in e-commerce gaming and remittances by Q4 2025 is shaped by a complex interplay of technological advancements, regulatory changes, consumer behaviors, and market dynamics. The counterintuitive insights reveal that while many trends point towards a digital future, underlying challenges could impede the realization of this vision. The anticipated 50% increase in the adoption of e-commerce gaming and remittances by Q4 2025 is a significant indicator of the ongoing transformation in financial services. While the report offers a comprehensive overview of the expected trends, certain pivotal insights may be overlooked by many readers that are crucial for understanding the broader implications of this transformation. 1. Role of AI in machine learning. The consensus among industry experts is that AI will be instrumental in enhancing user experience and operational efficiency across various sectors. However, the potential backlash against AI stemming from concerns about data privacy and the reliability of AI outputs is often under-discussed. This dichotomy between the benefits AI can bring and the ethical concerns surrounding its implementation is significant because it highlights the necessity for companies to balance innovation with responsible practices. Failure to do so could lead to consumer distrust and regulatory pushback, which may stifle the very advancements that AI is meant to facilitate. 2. Regulatory landscape. The report notes contrasting regulatory environments, particularly between the EU and the US, which is expected to undergo a deregulatory phase under the Trump administration. This regulatory divergence is critical as it shapes how financial institutions operate and innovate. The EU's stringent regulations could hinder agility and flexibility, potentially causing a competitive disadvantage for European firms compared to their US counterparts. This shift underscores the importance of understanding how varying regulatory frameworks can influence market dynamics and the strategic decisions made by companies. 3. Digital wallets and payment systems. There's substantial focus on the rise of digital wallets and their integration into e-commerce and remittances. However, the implications of digital wallets extending beyond mere payment systems to become comprehensive financial management tools is an important aspect often overlooked. As consumers become increasingly comfortable with these technologies, the expectation for seamless integration of financial services will rise. Companies that fail to adapt to this trend may find themselves outpaced by those that offer holistic solutions that meet evolving consumer needs, thus underscoring a shift towards embedded finance. For impact of instant payments, the introduction of real-time payment systems is highlighted as a major milestone for the industry. However, the report also suggests that the broader implications of these systems, such as their potential to disrupt traditional banking operations and create new revenue streams, are not fully explored. Instant payment systems not only enhance user convenience but also pose risks in terms of fraud and cybersecurity. This dual-edged nature of rapid innovation necessitates that financial institutions invest heavily in security measures to protect against increasingly sophisticated threats which could otherwise undermine the benefits of real-time transactions. 5. Consumer behavior shifts. A significant increase in e-commerce adoption is expected, particularly in developing regions. Yet the nuances of changing consumer behaviors, such as the demand for sustainability, inclusivity, and ethical business practices, are pivotal. Businesses that can swiftly adapt to these evolving consumer preferences will not only capture market share but also establish lasting loyalty. The report notes the acceleration of trends due to the pandemic. But it is critical to recognize that the post-pandemic landscape is characterized by a more conscious consumer who prioritizes values alongside convenience. 6. Interconnectedness of trends. The interplay between technological advancements like AI changing consumer behaviors and regulatory changes is crucial for understanding the financial landscape in 2025. The report discusses these elements separately, but the integration of these trends, how AI can enhance customer personalization while complying with new regulations, for instance, will be pivotal in shaping competitive strategies. Firms that can navigate this interconnectedness will emerge as leaders in the market. 7. Emerging markets and financial inclusion. The anticipated growth in e-commerce and remittances is particularly pronounced in emerging markets where improved internet connectivity and a burgeoning middle class are driving demand. However, there is often insufficient emphasis on the role of fintech innovations in promoting financial inclusion in these regions. By facilitating access to banking services for underserved populations, fintech can play a transformative role in economic growth and stability. Understanding the socio-economic context of these markets is essential for stakeholders looking to capitalize on opportunities there. 8. Risks associated with digital transformation. As companies rapidly adopt new technologies, the potential risks, ranging from cyber threats to regulatory compliance issues, are significant. The report mentions the importance of cybersecurity, yet the specific vulnerabilities introduced by new technologies like AI and digital wallets deserve greater emphasis. Firms must adopt proactive risk management strategies that not only address immediate challenges but also anticipate future threats as they innovate. In summary, the anticipated 50% increase in the adoption of e-commerce gaming and remittances by Q4 2025 signifies a complex interplay of technological, regulatory, and consumer dynamics. By paying attention to the nuances of AI integration, regulatory impacts, consumer behavior shifts, and risk management in the digital realm, stakeholders can better prepare for the challenges and opportunities that lie ahead in this rapidly evolving financial landscape. The significance of these details is not just in their immediate implications but in how they will shape the long-term viability and competitiveness of firms navigating this transformation. The anticipated 50% increase in adoption rates for e-commerce gaming and remittances by Q4 2025 is a critical juncture for the financial services landscape. The trends emerging from various industry insights highlight significant shifts in technology, consumer behavior, and regulatory frameworks. Here are the 4 most valuable points for in-depth analysis and discussion. 1. Technological advancements driving adoption. The integration of advanced technologies, particularly artificial intelligence (AI) and machine learning, is central to the expected surge in adoption. The role of AI in enhancing operational efficiency, personalizing customer experiences, and improving fraud detection is being emphasized across various sectors. Key insights. AI in financial services. AI is increasingly being used for automating processes such as underwriting, compliance, and customer service. This can lead to faster decision-making and improved customer engagement, particularly in e-commerce and gaming platforms. Real-time payments. The move towards real-time payments is gaining momentum, driven by both consumer demand for immediacy and advancements in payment processing technology. This is expected to revolutionize the remittances market, making transactions quicker and more efficient. Embedded finance. The concept of embedded finance, where financial services are integrated directly into non-financial platforms, will continue to reshape how services are delivered. This trend exemplifies how technology can streamline user experiences and increase engagement, particularly among younger, tech-savvy consumers. 2. Changing consumer behavior and expectations. The shift in consumer behavior due to the COVID-19 pandemic has led to a lasting preference for digital solutions. Consumers have become accustomed to the convenience of online shopping, gaming, and quick remittance options, driving the demand for enhanced digital experiences. Key insights. Hyper-personalization. As consumers increasingly expect tailored services, businesses will need to leverage data analytics to understand and predict customer needs. This trend is particularly relevant in e-commerce and gaming, where user engagement and retention are critical. Trust and security. With rising concerns over data privacy and fraud, consumers are prioritizing secure payment methods. The demand for technologies such as biometric authentication and real-time fraud detection is expected to rise, compelling businesses to invest in robust security measures. Financial inclusion. The push for digital payment systems, particularly in emerging markets, illustrates a growing recognition of the need for financial inclusion. The ability to access financial services is becoming crucial, particularly for unbanked populations. 3. Regulatory changes and compliance challenges. The evolving regulatory landscape will significantly impact how financial services operate. With regulations such as the Digital Operational Resilience Act DORA in the EU and anticipated changes in the US under the new administration, businesses must adapt to ensure compliance while fostering innovation. Key insights. Regulation as a catalyst for change. Regulatory frameworks are not just constraints but can also drive innovation by setting standards that push companies to improve their services. For example, compliance with DORA will necessitate investment in cybersecurity measures and operational resilience, ultimately enhancing consumer trust. Impact of open banking. The advancement of open banking initiatives will create opportunities for third-party providers to offer innovative financial solutions. However, this also raises challenges around data security and consumer protection that must be addressed. Increased scrutiny of AI. As the use of AI in financial services grows, so too will regulatory scrutiny. The need for transparent and accountable AI systems will emerge as a significant focus, with implications for how companies deploy these technologies. 4. Interplay of global events and financial markets. The anticipated political and economic shifts, including the return of Donald Trump to the U.S. presidency and ongoing geopolitical tensions, will create an unpredictable environment for financial markets. These dynamics will influence investment strategies and consumer confidence. Key insights. Market volatility. The potential for increased tariffs and trade tensions can create uncertainty in the markets, impacting investor behavior. Firms will need to prepare for fluctuations in currency and commodity prices while maintaining operational agility. Focus on sustainability and ESG. The rising importance of environmental, social, and governance ESG considerations will shape investment strategies. Companies that align their practices with sustainability goals may gain a competitive edge as consumers increasingly prefer responsible business practices. Strategic mergers and acquisitions. As firms navigate these complex challenges, there may be a rise in strategic M&A activity, particularly among fintechs and traditional banks seeking to consolidate their positions and expand their offerings. Conclusion. The anticipated 50% increase in adoption rates for e-commerce gaming and remittances by Q4 2025 signifies a transformative period for financial services. By focusing on technological advancements changing consumer behaviors, regulatory changes, and the interplay of global events, industry stakeholders can better navigate this evolving landscape. Continuous analysis and adaptability will be essential for organizations aiming to remain competitive and responsive to emerging trends. 1. The rise of e-commerce during the COVID-19 pandemic. in 2020. The COVID-19 pandemic drastically accelerated the adoption of e-commerce as consumers shifted to online shopping due to lockdowns and social distancing measures. This transformation mirrored the anticipated 50% adoption increase in e-commerce gaming and remittances predicted for Q4 2025, showcasing how external factors can rapidly reshape consumer behavior and market dynamics. 2. The introduction of contactless payments. The surge in contactless payment adoption during the COVID-19 pandemic is a historical case that parallels the expected growth in digital payment solutions. As consumers sought safer and more convenient payment methods, contactless payments became mainstream, significantly increasing transaction volumes and changing the landscape of retail payments. 3. The gaming industry's shift to digital platforms. The gaming industry has experienced a significant transformation over the last decade, particularly with the rise of online gaming and digital distribution platforms such as Steam and the Epic Games Store. This shift reflects changing consumer preferences, similar to the expected increase in gaming adoption by 50% by Q4 2025, driven by technological advancements and a greater push for accessibility and convenience in gaming experiences. These cases exemplify how transformative shifts in consumer behavior and technological advancements can lead to rapid adoption increases in various sectors, much like the anticipated changes in e-commerce gaming and remittances. Future outlook: predictions for the financial services landscape by Q4 2025. As we look towards the end of 2025, the financial services industry is poised to undergo significant transformation across various sectors such as e-commerce gaming and remittances, with a projected 50% increase in adoption rates driven by technological advancements changing consumer behaviors and evolving regulatory frameworks. 1. E-commerce expansion. The global e-commerce market is anticipated to reach approximately $7.5 trillion by 2025, driven by enhanced internet connectivity, particularly in developing regions. Digital wallets and payment systems will dominate transactions, offering consumers increased convenience and security. The integration of AI will further improve user experiences, with personalized shopping recommendations and streamlined payment processes becoming standard. 2. Gaming industry growth. The gaming industry is expected to benefit similarly from technological innovations. Enhanced online gaming experiences driven by advancements in graphics and AI will attract a broader user base. Additionally, the rise of blockchain technology in gaming, including play-to-earn models, will reshape monetization strategies, making gaming a lucrative avenue for financial transactions and investments. 3. Remittances and cross-border payments. Remittances are anticipated to become more efficient and cost-effective due to the adoption of blockchain and stablecoin technologies. Enhanced real-time payment systems will facilitate smoother cross-border transactions, reducing costs and waiting times. Regulatory clarity will play a key role in ensuring the security and reliability of these new methods, fostering consumer trust. 4. Rise of AI and automation. AI is set to play a transformative role across financial services by enhancing operational efficiency, risk management, and customer engagement. AI-driven fraud detection and personalized service offerings will become industry norms. Companies that leverage generative AI for customer interactions will gain a competitive edge, as these technologies will enable more personalized and efficient service delivery. 5. Regulatory landscape changes. The regulatory environment will evolve, particularly in the wake of significant political shifts, such as the anticipated deregulation under the new Trump administration in the U.S. This may encourage innovation but could also introduce risks. In contrast, the EU will likely implement stringent regulations surrounding AI and financial transactions, creating a complex compliance landscape for financial institutions operating across borders. 6. Focus on cybersecurity. As digital transactions increase, so will the sophistication of cyber threats. Financial institutions will need to prioritize robust cybersecurity measures, employing AI and machine learning to detect and mitigate risks effectively. Compliance with new regulations such as the Digital Operational Resilience Act DORA in the EU will be crucial for maintaining consumer trust and safeguarding sensitive information. 7. Personalization in financial services. The trend towards hyper-personalization will intensify, with financial institutions utilizing advanced data analytics to tailor services to individual customer needs. This shift will not only enhance customer satisfaction but also drive loyalty in an increasingly competitive market. Consumers will expect seamless integration of financial services into their daily lives, facilitated by embedded finance solutions. 8. Sustainability and ESG considerations. Environmental, social, and governance (ESG) criteria will become more integral to investment and lending decisions. Financial institutions will face pressure to adopt sustainable practices and offer products that align with consumers' growing demand for ethical investment options. This will foster new partnerships and innovations aimed at promoting sustainability. 9. Financial inclusion efforts. The continued push for financial inclusion will see fintech companies focusing on underserved populations, particularly in emerging markets. Solutions that offer easy access to credit and payment systems will gain traction, enabling a broader demographic to participate in the financial ecosystem. This trend will be crucial in addressing the needs of the estimated 1.4 billion unbanked individuals globally. 10. Transformation in payment technologies. The payments landscape will witness further evolution with an increase in the adoption of real-time payment systems, digital wallets, and alternative payment methods. The integration of AI in transaction processes will streamline operations and enhance security. The emergence of payment orchestration solutions will empower businesses to manage multiple payment methods efficiently, catering to diverse consumer preferences. Conclusion. The anticipated 50% increase in the adoption of e-commerce gaming and remittances by Q4 2025 reflects a period of substantial change in the financial services landscape. Organizations must adapt rapidly to leverage technological advancements, navigate complex regulatory frameworks, and meet evolving consumer expectations. By embracing innovation and prioritizing customer-centric solutions, financial institutions can position themselves for success in this dynamic environment. As we approach 2025, the interplay between technological integration, regulatory shifts, and consumer demands will define the future trajectory of the financial services sector.